Hello, this is Sima from APC Finance Consultants bringing you today's key economic events. The US ADP Non-Farm Employment Change Report will be released. This report measures the change in the number of jobs added to the US economy, excluding agricultural and government positions. It provides an early indication of employment growth and typically precedes the official government jobs and unemployment report by 2 days, offering insights into the upcoming non-farm payrolls data from the Department of Labor. A higher than expected reading is generally seen as positive for the US dollar, while a lower one may indicate weaker job growth. The quarterly gross domestic product (GDP) report will also be released in the United States. This indicator is highly significant as it reflects the overall change in economic activity. Quarterly results provides insights into whether the economy is experiencing growth, slowdown, or contraction. Higher than expected readings should be interpreted as positive for the US dollar, while lower ones suggest the opposite. The Bank of Canada BOC interest rate decision will be released. The BOC Monetary Policy Committee meets 8 times a year to determine the short-term interest rate. Following the meeting, the bank releases a statement outlining its decision, along with a brief commentary on the economic conditions that influenced it. More importantly, the statement often includes signals regarding future policy direction. Interest rate decisions are primarily based on inflation, as the central bank's main objective is to maintain price stability. When inflation exceeds approximately 2%, the BOC may raise interest rates to curb rising prices. A higher interest rate generally supports the Canadian dollar, while lower rates may put pressure on the currency. The U.S. Crude Oil Inventory report will also be released. This report measures the weekly change in the number of barrels of crude oil stored by the U.S. energy companies. Inventory levels impact petroleum product prices, influencing the cost of various goods and services and consequently inflation and other economic indicators. The U.S. Federal Reserve interest rate decision will also be announced, followed by a press conference from the Fed chair. Interest rate decisions are primarily based on inflation, as the central bank's main objective is to maintain price stability. When inflation rises above approximately 2%, the Fed tends to raise interest rates in an effort to curb rising prices. More significant than the rate decision itself is the statement delivered by the Fed chair, which includes a brief assessment of the economic conditions that influence the decision. The key aspect of the statement is the forward guidance it provides regarding future policy moves. Traders closely analyze even slight changes in the wording of the Fed statement from one meeting to the next, as these can signal shifts in the central bank's approach. And that's all for today. Thank you for watching and see you next time.